Welcome to the Applied Blockchain podcast, where blockchain technology and innovation are in the spotlight. My name is Adi Ben-Ari, and I'm the founder and CEO of Applied Blockchain, and I'll be your host as we dive into relaxed conversations with industry experts and thought leaders to get their views on what they're building, the Web3 ecosystem and its transformative impact on the modern world. Simon Jones from Baanx, welcome to the Applied Blockchain podcast.
Thanks, Adi. Good to be here.
Right, so Simon, we've obviously known each other for a while, but for the audience, maybe tell us a little bit about your background, I guess what you do, how you got here, how you got into the space.
Yeah, sure. So I originally started off actually in finance, so kind of a misspent youth, and then kind of worked my way over more into the kind of technology world, originally focusing more on social media. Spent a long time in that world, then went into VC. So I used to run a VC fund based out of London for a large US endowment, looking after kind of early stage and associated peripherals, mainly in fintech. Yeah, mainly in kind of fintech and associated peripherals. So kind of acquiring, banking as a service, issuing IBANs, all the kind of good stuff around making infrastructure work. And then basically decided that I actually preferred working in a much more kind of operational environment. So I joined Baanx kind of almost 3 years ago now. And at Baanx, I look after the kind of commercial side of the business. So that's basically strategy, product, marketing, and relationships that we have. So kind of my core role really is to kind of drive growth within the business.
Okay, good. And Simon, what got you into so I understand like you background in finance and then VC, you obviously start seeing new things coming into fintech, and I guess some of those would have been blockchain and Web3 related at the time. So is that when you were first exposed to it?
Yeah, I mean, I've been interested in crypto for a long time. I mean, going back to 2016. I think the thing that always kind of struck me about traditional world of finance was that what people really did was they digitalized an analog process, right? So if you look at kind of the core components of financial services, for example, the art of making a payment, for example, is actually 8 or 9 different processes. Yeah. And it's because once upon a time, there was someone physically sat there checking in each individual payment before they sent it out. And what they did was they effectively came along and said, okay, well, let's just digitalize that, but let's not change it. And to me, it just struck me as a kind of gloriously inefficient world. And then I actually, I've always been a student of history, right? And if you look back at the kind of, the history of banking, for example, why does banking exist? Well, because many, many years ago, people looked for somewhere safe to keep their money because they didn't want to keep it in their house, right? They were concerned that if they kept their money under their bed, their house would get robbed. So they went and put it in this incredibly secure place called a bank, which had iron bars and thick walls and doors that were lockable, right? And safes and vaults and all these other things. And then over time, of course, the world has evolved where, cash really in most places now is no longer a physical instrument. And what always struck me about that was, okay, so you have this kind of, should we say, legacy logic that you need a bank. But in reality, the things that we interface with are basically this, right? Or your computer. And to me, it was like when you actually start to delve beneath the surface and you look how effectively very simple has been made incredibly complicated because of the fact that, you just you took this analog process and digitalized it. It just struck me as kind of frankly, just an area that needed not evolution, but complete overhaul. Yeah. And when you start to actually look into the idea that, I can send a payment to you now via an API call, end-to-end, peer-to-peer, trustless and based on technology, you think, well, that has to be the future. And then when you actually start to dig in to the sector a little bit, and you realize, payments, for example, is roughly a $2 trillion industry globally, right? And in reality, that's $2 trillion that are directly extracted from the real economy, right? Because either I, as the consumer, are paying that money away, or that money is being paid away by the merchant who is paying,
which is indirect to the consumer, right?
Well, exactly. And you start to look through that and you think, well, hang on, why do I need a bank, right?
It's very interesting that you started with like the reason for it being is the security, because then you think, okay, like you say, it was physical walls and bars and safes and so on. Then it became cyber security, right? So, I worked at a bank that spent probably £1 billion a year on security infrastructure. And then often when I explain Bitcoin to people, I say there's no security, right? Because Bitcoin, as you know, and the public blockchains, there's no firewalls, right? It's just the cryptography itself the protocol itself is the security. And that part of it hasn't really been compromised on those main protocols, so, for over a decade now. And so it kind of turns the whole model upside down, right?
Absolutely. And of course, cryptography is ultimately the most accessible form of quantum physics, right? I mean, that's where it comes from, right?
Whoa, whoa.
And well, it's true though, right? So you have the benefit of many years of research and development and intellectual engagement from some of the smartest
Mhm.
minds in the world, and automatically secure your money because they're using cryptography as an underlying principle to ensure that the assets that sit with you are safe and they sit with you, right? And in theory, if you control your keys, only you control your asset base, right? Which for me, I just think, well, why should I need to go and ask for a secondary permission to move my own money,
Yeah.
right? Because let's be honest, 99% of the time it works okay, but the 1% that it doesn't, you have a major problem.
Yeah.
But I had a problem yesterday. I was trying to make a payment on something, not using one of our products, I should add, but it just wouldn't go through. And you sit there thinking, okay, I've just wasted 2 hours.
This was a crypto payment?
Not a crypto payment, it's a
Oh,
fiat payment. Yeah.
fiat payment. Yeah.
But it took me 2 hours
Yeah.
to actually send a payment to someone. And you think to yourself, well, why can't I just send this directly? Why can't I just push pay this to someone without needing a bank, right? As long as they've got a wallet in which they can receive it, I want to send it. It's my money. What's the problem?
Yeah. Yeah. Makes sense. So then what are you doing about this? What is Baanx and what's its role in the ecosystem? How are you helping to change this or to do or to change it through Baanx, I guess.
So we're basically kind of core infra, right? So we are a product at our heart in the sense that we have designed products that specifically enable people to spend directly from self custody.
Mm-hmm.
But the key benefit to that is you don't have to lock up your funds, right? So we use account abstraction, ERC 4337 standard, which effectively means that you can sign a smart contract and you can enable the ability for you, when you sign a transaction using a card, those to effectively spend directly from self-custody in the real world. So you're bridging two worlds there. But I think, more fundamentally, what we are really doing is pushing the wallet towards the idea of being a non-custodial neobank, right? So if you think about what would it take for the majority of consumers to be able to bin their bank, right? I don't need a bank. It's a relevant concept to me. What does it mean? Well, firstly, you have to be able to access assets in the real world, right? So you have a very practical challenge of, hey, how do I pay for my shopping? Secondly, though, the question is how do you receive and how do you send funds in and out of your account, right? So if you have things like tokenized IBANs and everything else, what you really start to do is transform crypto wallets from being this kind of slightly abstract thing that some people understand to being effectively like a non-custodial neobank. So if you think about it like Revolut, who today just got their banking license, what you're actually getting effectively is the functionality of Revolut, but actually you don't need Revolut. Revolut's been replaced by the technology, right? And that to me really is the kind of, the key to life. So we work with kind of 6 out of the top 10 wallets. So we work with, the number one hardware wallet, the number one browser wallet, the number one mobile wallet to really scale these products. And, when you look at kind of, what does that mean for the world? Well, actually, there's a kind of myriad of use cases. So firstly, you have places like Europe and the US, which are relatively well served, but high cost environments to operate in. Where you can say, well, actually, I should have the ability to pick and switch. I should have the ability to route a payment via the cheapest and fastest way. But then you also have kind of, the secondary markets, which, like Latin America, for example, which is a great example. And everyone in crypto is obsessed with a place like Argentina, right? But actually, when you drill down into that as a use case, it's real, right? You have a hyperinflationary economy. You can't get a US denominated bank account unless you have around $10,000 to deposit. The average Argentinian doesn't have that because the peso will always deflate. They will never have that.
Yeah.
So you say, okay, well, how do you get the ability to protect yourself from hyperinflation? Well, denominating your assets into USDC or USDT or anything that's US effectively hedged or backed, or any other currency that you choose in the digital environment, gives you that automatic protection from inflation. Now, of course, then you have this problem of saying, well, hey, I put my money over here and I can't access it. So then you put someone like us in that mix. You say, well, hang on a minute. You've got USDC sat over here in a non-custodial wallet, and you want to go do your shopping. Okay, you can go do your shopping, right? So I think that's
that's through a card solution, right? That's through integrating.
Yeah. So we do, obviously, as I said, this direct spend from self-custody via card, which is obviously effectively instant. And
Hmm.
also we do this kind of tokenized IBAN solution where you can move funds and you can do on-chain swaps between crypto and fiat,
Yeah.
which will be coming out slightly later this year. And then in addition to that, what you've also got is, I think, this kind of third group as such, which is this third group of people in the world, which are basically people who are unbanked, right? So as we speak today, there's roughly 1.2 billion people in the world who don't have access to a basic range of financial services. So our mission has really been to say that how do you make it so that anybody who has access to a mobile phone has access to a range of financial services? And the easiest way to do that, of course, is to have a non-custodial wallet, which you can then plug in, right? So if you think about it like a container that connects to a lot of other containers, that's how you start to kind of pull the world together.
Yeah.
And the key to that really is you're taking apart what was core infrastructure, but then at the same time you're putting that back together by enabling that last mile.
Yeah.
So that's really where we're focused. There's also some other use cases around this. People forget that the app stores, the Google Store, for example, you're talking about roughly 30% commissions paid away from various different forms of apps. So we're also working with kind of content creators to say that there's a much more democratic way of doing this. You can actually effectively embed financial services within your application by embedding a wallet with that functionality in there so that you can have a direct-to-consumer relationship as opposed to needing to work through a platform.
Yeah.
So on one side of the world, we're trying to re-platform banking. On the other side of the world, we're trying to re-platform the internet. And I guess the third part of that is we're trying to, to some extent, tether money to the internet so that we're solving one of the original problems, which is how do you make payments anywhere in the world.
So what's stopping you, for the underbanked, for example, what's stopping them from using this today?
We were the first people to build it. So as we launch, it will become accessible. And I think, what are the major barriers? I think the major barriers to entry are pretty straightforward, right? So if you look at payments is hyper-localized, right? It goes country by country, it goes region by region, whereas technology is global. So what you have to do is almost draw this big map of saying, hey, this is where I need this coverage, right? And as I need that coverage, I can fill in those dots, right? So I can go country by country and get the permissions that I need, and the licenses that I need, and the suppliers that I need in those regions to be able to actually operate. That's really the only core barrier. It's a regulatory environment. And, even, for example, people think like card schemes are global. They're not, right? If you're licensed and to issue in Europe, you still then have to go and get separate permission to issue in Latin America or US or Asia, right? So really that's the biggest curve. It's that kind of legacy piece of, again, going back to what I was saying earlier, when we digitalized analog processes, people didn't really think, when they were building out card scheme globalization 30 years ago, that someone from Europe would want to go and issue a card in America, or someone from America would want to go and issue a card in Japan. They just assumed that those people would land in that country, pick up and build. So really that's the only real core barrier. And we're back. We are tackling that. We will be doing the US hopefully later this year, and also Latin America. So we're pretty well set in terms of the expansion plan. We already service roughly 32 countries, mainly in Europe and the ECC. But we're kind of pushing globally because obviously, what we see is that there are a lot more consumers, a lot more interactions, a lot more interest in this space in countries that have a more atomized, or should I say, better broken banking system.
Okay, it's interesting. If I go back to your original comment about like why banks are there, right? And I look at my relationship with my bank today, right? Let's say as a consumer, from a technical perspective, I think about two parts, right? There's their infrastructure where they're looking after my account and my bank balance, right? And we talked about that. They're spending a billion pounds to do that, and we have infrastructure that just does that on its own. And the other side of it is, how do I interact with my bank, right? How do I send instructions? And I do that through my mobile app, and that's really anchored in the security of my mobile, right? Whether it's some kind of two-factor authentication or key or biometric check and so on. But that's not really the bank's infrastructure. And so if I then move on to crypto, a blockchain type environment, I get the back-end infrastructure from the blockchain itself, right? And then the way I issue instructions is through the security of my mobile device, right? Again, through biometrics and the key that's stored there. So ultimately, you're falling back on the same security. Your layer in between now, your backend can now just be completely much more efficient and open, basically, and much lower cost, as you said.
Well, exactly. And, when you look at most systems, right, it's always the endpoints that have the vulnerability. So it is as safe as the security of your phone. Right? And most people do trust their phone. Right? I know I do. I mean, frankly, of all the devices that I own, probably knows more about me than any other device. Yeah, it knows what I
Yes.
do, it knows where I go,
Well,
it knows who I talk to, it knows what I
yeah.
buy. Yeah,
Well, I mean, the vulnerability on the banking side is similar, right? I mean, if somebody gets hold of my phone while it's unlocked, they can access, they can do things which they shouldn't, or if they can somehow fake the biometrics and so on. So it's almost the same points of attack on the device itself, which are they're obviously being worked on by the device manufacturers and so on. Right?
exactly. And the thing about those, right? So if you think about it, there's two vectors, right? There's the vector that we just discussed, and then the second vector is what's going on behind the scenes, right?
Yeah.
What are the bank doing with the money? And if you look at, for example, even places like the US,
Yeah.
I mean, just Google US bank failures, right? There are loads of them, right? And in each instance, whilst people did get their money back, in most instances, they lost access to those funds for a period of time.
Yeah.
And why do you need to take that risk? When you then extrapolate that and you look at, some of the kind of shadow banking industries, like we all know stories about people like Celsius, Voyager, FTX, etc. I mean, the one common theme that is true in all those instances is on shadow banks, right? They took custody of your assets, and when you wanted them back, a lot of people couldn't get them back, right?
Yeah.
So what we're saying really is this very simple premise of, let's replace that financial services layer with technology. And ultimately, let's look at the trust question and trust yourself more so than you trust anyone else. Because, to be honest, most people know what they've done things, right?
Agreed. And then, so if I think about what you're doing on top of that, because the blockchain gives you the basic payment infrastructure, if you like, and then the wallets give you the ability to manage your keys and send transactions, then you're doing two things really. One is you're enabling financial services and integration of traditional financial services into that. And you're also, and part of that, I guess, is integrating with merchants and the tools that merchants use, right? Which, as you said, is the cards and so on.
Well, exactly. We're basically unbundling a bunch of stuff and putting it back together, right? What we're doing is disintermediating or deaggregating, right?
Yeah.
And there's a huge amount of things you can start to actually solve when you take that approach. For example, if you look at retail, the biggest issue in retail is very straightforward. You can go to a shop every day of your life, you can buy things there, but they don't know that you're their customer unless you choose to give them your information, because you can't reverse message a card. But in theory, there's a world in which you can say, well, I'm spending directly from a non-custodial wallet in the store. I want to share my information with this retailer. And in return for that, what do I get? I get a benefit, right? The benefit is I get a free cup of coffee because I did it. Now, in reality, at the moment, what would happen is that retailer would pay Google to highlight that back to you as an offer.
Yeah.
And you start to say, well, hang on, the retailer can win because they save money and they're more targeted. But secondarily, the consumer can win because you can say, well, let's reallocate that budget and give people a free coffee as opposed to spending adverts on coffee on Google, right?
Yeah. Yeah.
And that's really the world in which we're working towards. I mean, I think one of the big things with the internet was it platformed far too quickly, right? In theory, it should have been this kind of decentralized network in which you could do various different things. But in reality, how we use it is that we all use the same core applications, right? Everyone watching this, using this, will be using some form of Google product or some form of Apple product in their life. They will be using something like Amazon, right? They will be using Netflix or Spotify,
Yeah.
And I doubt there's anybody listening to this podcast today who has not got one of those products somewhere that they're interacting with, right? Now, what we're saying is, look, in reality, what do those services do? Well, they operate in a way, algorithmically, where they're designed to promote those things that are bigger and more popular, but they don't necessarily take a view on what's better, right, for the consumer.
Yeah.
Because to some extent, the abstraction of value is that people have to pay to play on those servers, right?
Yeah, I mean, it's like the problems of the traditional financial system, as you say. There's sort of monopolistic or oligopolistic activity where now there's a fee that's just sitting there that's very difficult to eat into and is being protected by the incumbents. Right?
Exactly, and our view is to say, well, why can't you just decentralize that and provide those benefits direct to consumer? Mm-hmm. Because ultimately, if you want to switch people away from a traditional environment, cheaper and faster is one thing, right? But we all know that more rewarding is the third pillar that you've got to work towards. Mm-hmm. If you can say to someone, hey, I bought this thing and I got 8% cash back because I was shopping in a particular way, I didn't have to do anything. I made that choice when I signed up for the product. Yeah. Then you're starting to create an environment in which you're saying, well, look, there's real consumer benefit here. And if you look at, for example, something like Revolution, right? I think Revolution is a good example of of a financial services product. Why did I start using it? I started using it because I was on holiday. Yeah. And the guy next to me had it, and I looked at what he was paying every time he paid versus what I was paying every time I paid. And I decided I had to get Revolut, right?
I actually tested this once. I paid for something with two cards, with Revolut and with another card, and actually looked at the difference. And that's when I was there. Sorry, go on.
I was going to say exactly, right? Which is just amazing, right? You look at that benefit and say straight away, okay, that's the only card I want to use, right? Yeah. And what we're saying is, hey, let's create an environment in which you could, in theory, get 10% of your cash back because the merchant's chosen to give you that. But in theory, you could get that cash back at checkout. So I've just gone and I've paid $100 and I've got given $10 back straight away.
Yeah, there's a really interesting thing you pointed out there. Right? One, I think this also touches on your social media marketing background, right? I guess you're bringing some kind of rich experience to bring these things together as well. But when I think about one of the ways that I try to explain why things are broken today and what blockchain can bring is we talk about like delivery of assets versus payments, and we point out that the payments are on one set of rails and the assets are on another. So even if I think about like sending out an invoice business to business and getting paid, those two things live in different worlds. What you're talking about is also bringing like the customer data and the customer reward and experience onto the same platform as the payment.
Exactly. So what we're really doing is abstracting kind of 4 or 5 different concepts, putting them together as opposed to separating, right?
Yeah.
And if you look at the way in which the world is going, there's a huge amount of focus and interoperability, right? So if you look at blockchain, for example, with chain abstraction, I think it's going to be a fascinating concept, right? Mm-hmm. To me, like if you look at the layer 1 and the layer 2 space, over the last 4 or 5 years, it's been on a relatively straightforward evolutionary path from a technology and a principles perspective, right? The big question has been, are there enough users? Is it fast enough? Is it cheap enough? Is there enough liquidity? Mm-hmm. Now you start to say, well, hang on. Actually, if I could start to abstract Ethereum liquidity, but put it onto a chain like, I don't know, Solana, or Bitcoin liquidity and put it onto, say, Near, right? Actually, the principles of that and that will be completely revolutionary. I think there'll be a whole load of layer 1s and layer 2s that start to disappear off the back of that, right? And that's actually, I think, one of the big bets you have to take as a builder in this world is you have to say, look, we need to be agnostic around technology.
Yeah.
But when you start to put all this together, you say, well, look, in theory, you can tokenize money markets. In theory, you can tokenize, payments. In theory, you can tokenize the trading, whatever asset you want to, right? I see one of your former colleagues actually tokenized one of the first agricultural commodities trades yesterday. And you start to look at that and you think to yourself, well, actually, what you end up with is this whole kind of effective computational layer that's just smarter, better, and more accessible because you're removing the barriers to entry at each point, right? And that is interesting. But then you start to add in some of the evolutions that we know are coming around different technologies like artificial intelligence, various other things. You start to say, well, hang on, you could actually have a wallet in your hand in a few years' time that actually not only gives you the best deal at checkout, but also knows what you shouldn't be spending, or gives you tells you actually, if you go do your shopping on a Tuesday rather than a Monday at 5 p.m. and save more money. All these different things. And when you start to kind of put that together, what it gives you really is an environment in which life becomes a little bit, easier, right? Technology is taking that level of lifting away from the consumer. It becomes smarter, but more importantly, it becomes more democratic, right? Because it's much more about the direct consumer prop. It's not about someone getting in front of you and waving a billboard at you and saying, hey, this is what you should be doing. It's about someone who actually knows you.
It's moving the power to the hands of the consumer. But I guess the other thing is the advantage of having the payment itself on the same layer as this data, decisioning, even AI, is that some of this stuff can be automated for you as a consumer. So you can guide it. How do you want things to work? And at some point, you don't necessarily have to be there to kind of make everything happen yourself or be a dependency. You can almost let it go and run in an optimized way for you. Right, because it's all happening in the same place. But that's
exactly
further in the future.
Yeah, no, absolutely. And ultimately, I think you have to start in that world of saying, how do you move value, right? Yeah. Because ultimately, value is the one thing that makes it worth building towards, right? If there's zero value in an ecosystem, what's the point of building, right? Once you start to migrate that value in the way that we're talking about towards the non-custodial world, then you start to create the secondary world of smart applications that should fall around that, because suddenly you've got a captive ecosystem where different participants can come into it, right? And I suppose what we envisage to some extent in the future is a world in which, hey, you say that I've got the ability to spend, but the wallet that you have could look very different to the wallet that I have, or the wallet the next person has, based on what we want to use that wallet for. Are we using it for everyday purchases, or are we looking for yield? Are we looking for savings? Are we looking for international payments? Which obviously, for us is a concept that we want to turn into the principle of sending a fax, right? I could do it, but why would I do it, right? There should be no such thing as an international payment. There should just be a payment that can land anywhere in the world, and it shouldn't take any longer because I choose to send it to America or Japan than it should do to send it to someone sat up the road in Canary Wharf.
Agreed. Simon, I think it's been great talking to you, and it's very worth it. I think you're one of the few people that even we've come across that's not just talking about this or in a place where things can't really be done, but you've got that combination, right? You've got with your past experience, a real 360 view of sort of the consumers, the marketing, the financial side of it, even the VC side of it. You're in an organization that can really innovate on this stuff properly and actually put stuff on the ground and is doing that. So it's very interesting to actually kind of cut through that and see what you're doing and where your thoughts are.
Thank you. Yeah, no, likewise. And obviously working with you guys has also been great. It's been really interesting, and especially I think some of those more specialist areas where we've kind of wanted to do a bit of research, wanted to understand a bit more, having that ability to pick that up to you guys and say, hey, you explain this to me. How does this work? It's great.
Okay, very good. Simon, one last question, which I ask everybody on the podcast. Have you got any sort of content, book, movie, podcast, something that you'd recommend to other people? It doesn't even have to be on this subject.
Yeah, I'm a core proponent of history, right?
Nice.
So I think that something like Peasant Russia Civil War by Dr. Orlando Figes, right? It's all about the famine in the Volga region post the Russian Revolution, right? Because if you actually look at what happened, right, you had this whole principle that you centralized the supply chain, right? Mm-hmm. And you had this whole principle that obviously, you as the individual were not responsible, the state was. Now, the issue with centralization, of course, is that centralized planning never works. We all know that. Secondarily to that, steps that they then took after that were to do things like limit production, limit supply, try to do different things, right? Yeah. And what that then led to ultimately was civil war, because people were starving, right? And I think that the reality of it is that the analogous situation that I would say to this world is if you don't give people what they want, you don't give them access to what they need, and you have the central authority that decides what you get, ultimately, eventually, it will break and you'll get a major problem. Yeah. And I think that there are numerous instances in history where you can look through that and you can say to yourself, when things break, things go wrong. I think probably the other thing I would recommend, there's a book, it's called The Whale, right? It's all about trading scandals, right? And actually something like Flash Boys, Michael Lewis's book, example, right? Yeah. Where you say that, you create this little microcosm in which lots of people get to play and make a lot of money, not necessarily because they're smarter, not necessarily because they're better, but because they have access, right? And you start to, again, analogous reverse that and say, well, why should everyone have that access to the same thing? Because what drives it is technology, right? And the kind of stuff that people like you are building and people like we are building, in theory, should provide market access to the same opportunities. And that's what it's all about. Using technology for democracy, but also using technology to provide equality of opportunity for consumers and users, no matter where they're in the world.
Yeah. Okay, excellent. That first book, definitely not what I was expecting, but I can see the logic. I'm also a big fan of history, so I think that often you go back and see these things and you think, oh my God, that's exactly what's happening now. And
I think the one thing that history teaches is that it always repeats, right? Yeah. Every banking crisis has 2 or 3 of the same components. Every failed institution has 2 or 3 of the same components, right? And they're pretty fundamental.
Yeah, and I think we don't do enough of kind of looking back and learning, because we could definitely do more of that. Okay, on that quite philosophical note, thank you very much again. It's been an absolute pleasure. Look forward to speaking again.
Likewise, Ali. Take care.
Thank you for listening to the Applied Blockchain podcast. Make sure you follow us on LinkedIn and Twitter for more updates. I hope you enjoyed today's episode, and if you did, please let us know by leaving a review and clicking subscribe. Until next time.